Alright, in this video we're going to get into slightly more interesting things. I'm going to define three main parts of what it takes to have a successful trading career. So you want to be in the right mindset. This is the base of everything that you are going to build upon. Number two, your trading system is the component that's actually going to make money for you. And we'll go into all the parts of a trading system in later videos. Number three is understanding the power of compounding. I mean, it's really simple. You got to have the right mindset, have a trading system that consistently is shown to make money in a backtesting or demo environment, and utilizing math by compounding your wealth. So having the right mindset, I believe, is really crucial because there's a certain way to approach trading. And if you're expecting it to be something different, then you won't be going down the right path. Your focus and direction is going to be going in a different, in a different direction, and you're going to be wasting time, money, and potentially giving yourself unnecessary trauma that you're going to have to repair down the road. Okay, so I think it's really important to start off with the right mindset and keep reminding yourself. We'll go through a few points here. They're not limited to these things. There's always things you will learn as you go down your trading journey. I'm discovering things and having epiphanies all the time. So it's an ongoing thing. And as long as you are aware of it, you can take note of it, you can study it, you can reflect on it. It'll greatly help you achieve success faster and more immensely. Okay? So number one, trading is the hardest way to make the easiest money. Trading success is 90% based on your mindset and psychology. Now I say 90%, that's not it's not an exact percentage, but I want to give you an idea of how important it is. Like I said, this is where your focus should be. And many traders know this, and they know this before they even go down the road of learning. But at the end of the day, they're still searching for something external, such as a new strategy or indicator or entries or chasing the new hot influencer or trading guru online. Okay, they're always searching for that thing that's easy, that doesn't require any inner work or self-improvement, that's just going to make them money. And it simply doesn't work like that. So trading is easy money. Once you can do it, the time you need to work is very small because it's all the growth is done through compounding, which we will go through in a minute. So you don't have to put in additional work. In fact, the workload is going to get less because you become more experienced, and trading it's mostly about waiting. It's not about sitting at a computer staring at charts. You find the most successful traders, they spend very little time working. And of course, the hard part is being a master of your own psyche. Number two, building the base of your house. When you build a house, the base is always first and is what is going to support the entire structure. Likewise, our mindset is what is going to determine how well everything holds together later. So the last thing you want to have to do is renovations on your house, or worse, demolish the entire thing once everything is added to it and built. So like I said, always have your mindset as number one priority as you develop as a trader and as a person as well. Do this and save yourself time, money, and unnecessary trauma. Number three, the man in the mirror. So this is something you're going to have to expect. When you progress, you're going to notice that your fears and flaws start to show their face in an amplified manner. So the results that you get from trading are going to be a direct reflection of who you are as a person. If you're subject to greed, the market will show you. If you're fearful, it will show you. If you are ashamed, arrogant, stubborn, impatient, you will 100% see it manifest, and there's no way to hide it. Trading is a wonderful opportunity to work on yourself. It's one of the reasons I love it, despite pain at times. But if you are someone who lives in denial, then you're going to have a really bad time. So trading is really going to make your insecurities come out and your flaws. I suggest being open to that and not resisting it. And of course, reflecting on it when you get the opportunity. Don't sweep it under the rug and say, "Oh, I won't do it next time." Just forget about it. I've done the same mistakes over and over again. For some people, it may take a lot of work, but you should see it as a privilege to get the opportunity to do so, rather than fight it or be in denial about it. Number 4, surrendering to uncertainty. Trading is not for everyone, and one big reason is the uncertainty involved. You don't know if you can do this type of work. You don't know when you'll be able to consistently make money. You don't know how much money you can make. You don't know when you may have a dry spell. You don't know those things. It takes a leap of faith in yourself to be able to be a part of this industry. You really have to love trading in all its glory to be able to stay long enough to see the fruits of your labor. So there's a lot of uncertainty in trading. Not in terms of whether you can make money or not. It's definitely possible. It's not based on luck or chance. Okay, everything that you're going to be doing and everything that you should do is based on, okay, if you believe that math works, then you you should believe that you can be successful at trading. It's not part of the uncertainty. The uncertainty comes in not knowing when the markets will offer you opportunities, and of course not having a set income like a normal job would. But this is what makes this such a lucrative industry. The money you can make is immense, so of course it's not easy. Nothing comes easy. Trading will eventually be easy, but the hard work is now in learning and improving your skills and improving yourself. Therefore, surrender to the uncertainty, have that leap of faith. You will eventually see some amazing things. Lastly, be instead of do. Most people think in terms of what do I have to do to achieve their goals. Few people understand that a better question to ask is, who do I have to be? Okay, this applies to everything, and I try to apply this in every aspect of my life in terms of achieving my goals. So the goals and milestones that you reach in life are directly correlated to who you are as a person. You think about it, if you were confident, business savvy, ambitious, hardworking, then you would be on your way to being wealthy, or perhaps you'd already be wealthy. Okay, there are many rich people who lose everything and still manage to recover back to riches because they are the type of person that is capable of being rich. Likewise, you can't be a Ironman competition winner if your fitness level isn't at a place where it needs to be in order to win. And there are also people who win millions in the lottery and lose it all and sometimes more. They go into debt. They were fortunate enough to win the lottery, but they do not have the financial knowledge. They're not responsible. They're not organized. And they're not in control of their own emotions, perhaps. They're greedy. They're egotistic. They eventually lose all the money. So they're not the person they need to be in order to be rich. So I hope you understand what I mean here. And you can think of perhaps some goals that you have set or some goals that you have given up on, or perhaps did you become the person you needed to be? Was your goal focused more on what you have to do? Yeah, it's quite an interesting thing to reflect upon. The second key to a successful trading career is having a profitable trading system. Okay, so in subsequent teachings, we'll go through all the essential working parts of a trading system and how to develop and operate one successfully. But I'll just give you an introduction here, okay? Basically, your trading system is what is going to generate money. It is your bread and butter. If you are a working Joe or freelancer, then your time and skills generate money. You go to a job and you exchange, you trade your time, and it's your skills that generate money. If you were a business owner, your service or product is the thing that generates money. In this case, it is your trading system. It's that working cog that is going to bring in money. It is how you enter and exit trades, how you manage your account, how you manage your risk, and even how you manage yourself. The goal is to find a positive edge in the market and be able to consistently replicate it. Eventually, you'll create your own trading system, or at the very least, alter an existing system to fit your style and needs. As mentioned before, trading is very personal. There's no one shoe fits all, despite many people touting their godly strategies to the world. If I had a shoe 5 sizes too small for you, could I ever convince you that it will work for your feet? Only you know what fits you. It is your job to incorporate that within your trading system so that you can achieve your full potential. So the main thing to remember here is that when we do start to go through developing a trading system that fits you, is to keep in mind it's not about making the most. It's about creating something that resonates with you as a person. The third key to a successful trading career is compounding. Compounding is the secret to surviving this industry and becoming wealthy. Okay, so it's not just about getting rich, it's also about surviving. There are many people who have made millions and have lost it all. They're not protecting their capital. They're being risky, and there's a certain element of luck to it as well. Likewise, there's a certain element of misfortune. Trading is about probabilities and therefore about percentages. The key is to risk small and let compounding be the one that grows your wealth exponentially. That's the power of compounding. So you should respect the risk involved in trading and respect how math works. I'll go through 2 following diagrams to illustrate the effects of compounding and loss based on percentages. So this is a compounds gain calculator that I've made on Excel. It helps me calculate some percentages sometimes, and I also occasionally look at it to kind of put things in perspective. Because compounding is what is going to make you money, and it's what you should focus on, not winning big on any single trade. And it also teaches you to be more patient as well. So I can enter my original amount, let's say $10,000 of trading capital, and we have percentages up here, 1%, 2, 3, 4, 5. This, you could say this is 1% per, making 1% per trade on average, or 1% per day or week, whatever you want the frequency to be. So let's just say days. So on the first day, we risk 1%, we make 1% out of our $10,000 account. On the second day, we reinvest this entire amount. Now we have a $10,100 account that we're risking 1% of. So we make $101. So we're making an additional dollar than the previous day. Okay, by the time you get down to, let's say 1 month, 30 days, we make an additional roughly around $27, $28 for that single day. So we started out with 100, and by the end of 1 month, we're making 120. But we're still risking only 1%. So let's jump straight to 3% per day. So let's say 1% per day. By the end of 30 days, we have made $3,478, which is about 34.7% of our initial account. If we did that with 3% per day, by the end of 30 days, we would have made $14,272. So that's more than doubling our account. We made 250%, or 150% rather. If we did 5%, at the end of 30 days, we would have made an additional $33,219. So that's it's quadrupling your account. For the 5% example, first day, 5%, we make 500. By the end of the last day of 1 month, you're making 1,000, maybe 2,000, a little bit less than 2,000 per trade. So you're still risking 5%. Initially, you're only making 500 per day. And by the end of 1 month, you're making 2,000 per day. And the end of 2 months, the end of 2 months, you're making quite a lot, basically. So starting from 10,000, earning 5% per day, within 2 months, you're at 186,000. Keep compounding that. 3 months, you're at 800,000. 6 months, you're at 65 million. And by the end of 1 year, you have $540 billion. All right, so while the math is correct, it's not, you can't say that, okay, you're going to make 5% per day. Sometimes you're going to lose money. Sometimes you're going to make more, sometimes you're going to make less. But when you're trading, you don't want to risk too much, and I'll show you why in a second. Generally, there's a thing called the 1% rule, where you don't risk more than 1% of your account per trade. Some people risk a little bit more, but if you're risking too high and you run into a string of losses, that's going to be really bad news, and it's going to affect your psychology, and it's going to be exponentially more difficult to get back to where you started. Okay, so here you can really see the power of compounding. Even risking 1%, end of 3 months, you are still, either you're making it 1% per day or risking 1% per trade, whatever it is. If you're making 1% per day, then by the end of 1 year, you have made significant amount of money, $377,000, starting from $10,000. So just think in lower percentages, which allows you to be safe and survive this market. Now I'll show you this loss chart, okay, which is going to demonstrate why you do not want to lose too much of your account at one time. The goal is always to let probability and compounding grow your wealth. Whether you're risking 5% per trade or you lost 5% on the day or the month, whatever it is, it would require you to make 5.26% just to get back to where you started. So if you're at $10,000, you risk 5% per trade and you lost that. You lost $500. You're only at $9,500 left, and you go ahead and risk 5%. If you risk 5% again and you won, you wouldn't have that whole $10,000 back, right? To get back to break even, you would have to make 5.26%. Because now you're trading 5% of 9,500, which is a lower number than 5% of 10,000. So it would be 1.05 times more difficult to get back to break even after that loss. If you lost 10%, you would need 11.11% to get back to break even, as in get back to where you started. The multiplier, it would be 1.11 times more effort or difficulty to get back to where you started. At 20%, it's now 5%. You got to make additional 5% just to get back. Okay, here it's 0.26 more. If you lost 10%, it's 1.11 more. At 20%, you got to make 5% more. At 30%, you have to make 12.85% more. And here's the thing, if you lost 50% of your account, if you lost half your account, you now have to make double, right? It would be a 2 times multiplier. So whatever you had to do to lose, now it's going to be double the effort just to get back. You're going to have to win twice as much than what you have lost. If you lost 70%, you would have to make 133%. You would have to make 233%, which is 3.33 times more difficult. And here's the thing. If you lost 90% of your account, you would now have to make 900% just to get back to where you started. That's 10 times more difficult. So if you started with 10,000 and you lost 90%, that means you lost 9,000 and you only have $1,000 left. So with your $1,000, you now have to make $9,000. It's like saying with $10,000, now you have to make $90,000 just to get back to break even, right? And remember, you want to risk small. Even if you're risking a large amount, such as 5%, is considered quite risky. If you were risking 5% per trade on a $1,000 account, you'd only be risking $50 per trade. So how many trades do you have to win just to get back to 10,000? That's why it's so much more easier for people to lose their entire account rather than to scale it, right? When it comes to growing their account, they're trying to make big. They're trying to make so much more. And once they start losing, they don't realize it's an exponentially more difficult hill to climb. You have to understand the math, folks. If you don't understand the math, then you're never going to make it. So just to come back to compounding, it's what's going to grow your account, okay? And you're going to do it by risking small. It's something you have to keep in mind. And don't forget, anytime you're feeling greedy and you're thinking, this is too slow, I'm making money too slow risking this amount, I gotta risk more, I'm sure I can win more. You gotta come back to that compounding chart and that loss chart, and remember that's how you want to approach it. In the next video, we'll go through components of a trading system. This is the bread and butter of your money machine, so don't forget to take notes, and I'll see you there.